SwissBorg is the official partner of my channel where you can buy, sell, hold and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Welcome back everybody. Let's have a look at the state of the markets. All markets starting very briefly with DXY, which is still coming down to the area that we said all those weeks back, you know, when just before we got rejected officially. I said this is the destination. We've come down pretty, more or less, exactly as expected. Exactly as expected. As Carl the Moon would say, if only he had done this himself, I'm sure he would have said that. But yeah, so this is still the major area of support that we're looking to tag. It's 104.3, 104.4, more or less this bit. Basic where I'd expect to see a significant bounce on this one. And then we'll see if this actually becomes a downtrend. You know, like the last time we came up to something, an area of significance like this one, we came down, bang, 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 hit the 50 exponential, rallied up a little bit, came down. We eventually went on to make a higher high, but that, you know, it was nothing really. It was basically a cycle in many ways of DXY. This is kind of how it goes. Up, down, up, down, up, down, to the bottom. Up, down, up, down, up, down, to the bottom. And then this is the sort of trajectory we're looking to fill over the next few years, I should say. You know, this is a weekly chart here, so by the time we actually hit the ground floor over here, maybe we're talking about 100, will be 2025. That's basically what we're looking at. So yeah, a bounce is soon to be felt on this one, I think. But again, it could just be the bounce with a series of lower highs and lower lows. So nothing changed there. Everything bounced 2.0 still in play. SPX, or the S&P, whichever you prefer, still working on its higher highs and higher lows on the weekly here as well. So the Everything Bounce 2.0 working very well. Apart from obviously crypto, we all know that now. But you know, these things happen in many ways. You think about crypto as almost like one giant stock market, really. So you know, when we talk about the Everything Bounce, you know, for stocks, there's going to be some stocks that don't feel that, you know, because they're subject to poor earnings or, you know, foul play or just, you know, all kinds of stuff. Isolated from the general trajectory of the major indice that they trade within. So that has happened to crypto because of, we all know what happens. It's FTX's fault. But otherwise, I would have expected it to have just trended with all markets because all markets are trending, including precious metals. So it's just unfortunate, really. But at least we got the stocks working, or at least we got gold and oil working. So with that in mind, let's have a look at the total market cap of crypto. And we've broken down below this major area of support, which is a shame. We are working on maybe looking at a double bottom forming in the short term, and if that's the case, then we could push right up to the level of support that was broken down from. And so that is not far from where we're at right now. Again, we're looking at this on a daily, so this really isn't far at all. It's a further 5, maybe 6% before we get rejected. It doesn't have to happen today. It could happen at any point over the next few days. Yeah, and so we are looking for a bit more upside on this one, to which I'd expect a rejection. So 5% more for total market cap. What's 5% more for Bitcoin? More or less, just give or take the area that we broke down from. So about 18,000, 18,500. So it all sort of merges into a sort of a major area for it, really. Can it break out from this resistance, or will it get rejected like it most likely will? That's the main question. So I favour further upside in the very short term, as in like immediately, today, maybe tomorrow. But as soon as we start to get to 18,000, we're going to start to see some serious problems, because it would match the market cap, it would also match Bitcoin's chart. So 18,000 is major resistance. Breaking above 18,500 is going to be above the 21 exponential and this box that we broke down from. So that would be a turning point, and from there, I'm not joking, we could rally into the 20,000s from that point forward. I know it sounds ridiculous, but it can happen. You know, we've got the Fed sort of talking about how they're quite happy with the way things are going after the last CPI report. Fair play. I think it's very early to speculate on them pivoting, especially with the dollar coming down. That's not really what they want to see. They'd rather be the people who bring the dollar down, not the chart. They want to bring it down. And they haven't. The markets have brought it down, or should I say, other forex pairs have brought it down. We worked that one out through looking at all the forex, or the major forex, of, you know, Japanese yen, pound, and euro, and they all joined forces to kick the DXY down the stairs, which is, you know, we were very grateful for, because we benefited from that for the most part. And so, yeah, turning our attention over to our forex pairs, you know, we can get our heads around where it's likely to gauge support, and also the Dixie says I want support around the 50 exponential on the weekly. So all of that suggests that we're not on borrowed time. We're still on track for time. But it will likely come to an end probably this week, maybe next week, and that would be the 6-week criteria that I gave it, 2 to 6 weeks for that move to play out. It looks like it's bang on track for 6 weeks from the top to the bottom, and then we'll have to see where we go from there. But the first thing I would expect would be a bounce for the Dixie, which would be further downside for everything else. Most likely, they do have a reasonable correlation, especially when you're looking at major pivots like the ones that we saw from the Everything Bounce 2.0, which was the dollar peak, and then basically the Dixie bounce, which is most likely going to have the inverse effect on everything else that trades against the dollar, because it will be short term, a very, very short term dollar strength, and again, you know, it could be a decent bounce, you know, a prolonged bounce. You could take a few weeks to play that one out too. Talking about a 4 or 5% move back up to the Bollinger Band center on the weekly there. So long story short, we are looking for further upside in the very short term for crypto. Eyes on the 10 exponential on this daily, coming in at 17,600. Breaking that wouldn't be too much of a problem. I could see that happening, but as soon as we just, you know, march up a little bit further to 18,000, into the $18,000 zone, especially 18,005, which is going to be a huge area of resistance, then we would be looking for further downside again, as this would just be a rejection. But we can always hope that traditional markets, whether it be stocks, commodities, or forex pairs, will allow for further upside to take place on this chart. And if that's the case, then we might be able to say that the bottom is in. But everyone, including myself, have, you know, speculated to bottoms being in throughout this bear market, for better or for worse. Now, there are reasons, as I explained over the weekend, why we could look at the fact that a bottom is in, and if it's not in, it's very close. But realistically, breaking down of this significance to these sort of levels does very realistically threaten the possibility of coming down to much lower. So basically breaking, ever so slightly breaking, but breaking all the same, the $12,000 zone, marking, you know, this, you know, the stage 2 of the major capitulation. Again, we went over this over the weekend. You know, that's how the last bear market ended. We got all these signs that bear market was finished, and then we waited for the bottom to be scraped out, and through that bottom became an accumulation zone, and then there was a pivot on its own chart, which is, these are the sort of things we could look for if we don't want to risk money, especially, you know, with what's going on with the exchanges. Everybody's scared of the exchanges right now, which is fair enough. You know, your money, you do what you want with it. Maybe the best thing to do is to wait for a new bull market to begin, and that takes place after a period of accumulation after the lows formed. So you've got plenty of time. There's no need to rush or buy the absolute bottom. I didn't buy the bottom last time. I bought, bought close to it. It bottomed around, 3,100 or so, thereabouts, give or take. And I bought around 3,700 once it had reclaimed its moving averages on the weekly. So I didn't buy the bottom. I bought a good 20% off the bottom. And no big deal. In hindsight, there's not a great deal difference between the absolute bottom and then the area where we can say, or almost safely say, that a bull market is on the horizon. There's really not much difference to it. You don't have to buy the absolute bottom. If a new bull market begins, we'll have plenty of time to trade all kinds of things for several years, and we'll enjoy it all over again. But for the moment, we still haven't necessarily carved out that bottom. We might have printed it. We may not have printed it, but there's certainly not been an accumulation period since finding this low, which means that we've still got plenty of time. We're unlikely to rally straight up and stay above there, although, you know, there is a chance that if we break the 18,500, we could make our way back up to any one of these areas. You know, suppose mid to low 20s at best, and we'll see what happens. But again, you know, time is probably your best ally in this sort of situation. You don't have to buy these lows. You don't really, honestly, don't have to buy these lows. And when we think that we could come down lower, then just wait it out. It's not a big deal. It's no big deal. But the Everything Bounce 2.0 for traditional markets is still in play, and that could certainly help Bitcoin sort of pull its socks up and have another little rally before the Dixie bounces. So that's the main thing to take away from this. The overall analysis from several weeks back is all still in play, but there's a difference when we're looking at crypto because of the issues that happened in FTX. If it wasn't for that, then we would be trending up into the 20s by now, probably reach that target of 26 that we had on our radar. But it's not doing it. But the rest of the world is doing it and will continue to do it until we reach this major area. Right, live stream tonight if you want to join that. There's a Patreon link in the description below. Otherwise, hope you have a nice day and take it easy.